Hello everyone and welcome back. In this video I want to talk about MSCI because we have a couple of updates. New information that we just learned about the company, and this is getting really bullish. This is increasing my confidence in MSCI. I was following MSCI and the stock recently crashed and the stock dropped a lot. I bought the tip here at $513, and since then I learned some pretty interesting news. One, the CEO is buying, and two, we can cross-read some information from Moody's and from S&P Global that are very bullish for MSCI. In case this is your first video, welcome. Welcome to this channel of quality investing. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And MSCI is exactly in my sweet spot. A great quality compounder that has been doing nothing when it comes to the stock price for years and years and years and years, but the fundamentals are improving and improving and improving, which means the valuation is getting quite compelling right now. And I made MSCI a core position in my portfolio. Now, as I bought the dip, MSCI should be 13% of my portfolio, the second largest position I have in my portfolio. And I want to show you something on a beautiful website called Stock Unlock. I want to show you the scores. The score tab that is quite new actually. It is like 1 week old, because in this tab you can see if a stock is richly priced or cheap or fair value. And you can see that for the past 5 or 6 years, the stock was almost always red or orange. It means expensive or fair value. It dropped in 2024 in May, and the stock became cheap at this moment. It rebounded instantly after this. In last April 2025, the stock dropped and it was green, cheap again. And now here we go. We dropped 20%. The stock became cheap and I bought the dip here. Since then, the stock has rebounded. It is starting to rebound like all the data providers, companies. S&P Global is rebounding, Moody's is rebounding, Gartner's, FactSet, everybody is rebounding, and we learned a couple of things. First of all, the CEO has bought the dip. The CEO of MSCI, Henry Fernandez, recently bought the dip. You see that for the past 2 decades, you don't have a lot of insider buying. I think he bought some shares in 2008, 2009, and since then, nothing. And then in 2024, he bought the dip that we just saw before. Look at this. In April, May 2024, he bought the dip. When it was green, look at this. When it was green here, he bought the dip. And then every time the stock dropped, he bought. You can have a pretty good table with all the buys. And I've been covering MSCI for a while on my channel actually. And every time you had the stock drop, I was buying the dip. I bought the dip here, and now very recently. And every time I bought the dip, I learned a few days after that the CEO also bought the dip. So now it's a 3 out of 3. I bought the dip 3 times, and I learned a few days later, like 2 days later, 3 days later, that the CEO, Henry Fernandez, bought the dip for him and his family. That means 3 things actually. Either I have the contact information of the CEO and he's calling me every time he makes a purchase so I can buy the dip. 2, second scenario, I am in contact with the CEO and I am calling him to inform him that he should buy the dip. Or 3, we share the view that the stock is cheap. You decide which scenario is more likely. The stock, based on the metric I showed you on Stock Unlock right now, is not often cheap. you want to seize the opportunity when the stock is dropping massively, because the fundamentals are great. You can look at all the metrics for MSCI, the revenue. Look at the revenue for the past 10 years. The definition of up and to the right. You can look at the free cash flow. Cash from operating activities, free cash flow. Free cash flow can work. Look at this. This is your free cash flow over time. The definition of up and to the right. So you want to seize these opportunities when there is a price drop. And now you just had a price drop at the beginning of the year. And all the people that wanted to sell already sold. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. We had a sell because of AI. The stock went up during earnings report, and I covered this on my YouTube channel. You can have a 1 or 2 hour video, complete video about the earnings report and my opinion on it. The report was okay, but nothing really extraordinary. So I said the stock is up 5%, but I don't understand why. And I did not buy the dip. I didn't buy the increase. I did not average up. I said the report was okay, nothing really surprising. And then something came in the market. Anthropic, Opus, AI models that could replace data providers. You had at the same time S&P Global that reported a weak guidance, a conservative guidance, and the call was not enough, the earnings call was not enough to seduce investors again. They said, we use our own data, an LLM cannot copy us. But the guidance was weak, Wall Street freaked out, and the stock dropped and dropped and dropped. They dropped 10% in one day and then continued to drop. But as I'm recording this video, Moody's just reported earnings, and I'm shooting this video after this, so February 19th. Moody's reported earnings, and similarly to Moody's, they said, we are fine. I mean, an AI cannot clone our business model because our business model is relies on trust, partnerships, reliability of the data. And as long as an LLM is hallucinating, you cannot clone our data. People will choose us because we are safe. You can trust us. Maybe it will be more expensive, but the data is complete and accurate. And nobody can steal our data. The data is private, so good luck taking the data. And the data is taken from decades of long-standing relationships, partnerships with banks, with companies, with countries. You cannot clone in 2 minutes. You cannot vibe code a credit rating agency. And by the way, guys, something about trust, reliability for the whole sector. Something for Moody's, for S&P Global, for MSCI, but also for Fair Isaac, FICO. If Moody's fails and the credit rating is wrong for some reason, and Moody's screws up, this is causing a lot of damages, you can sue Moody's. You can go in court and accuse Moody's. We had a contract saying that the data was reliable. As a matter of fact, the data was wrong, so we are going to sue you. Same thing for S&P Global, same thing for MSCI, same thing for FICO. If the FICO score is wrong, you can sue somebody. If you are using an LLM to source your data, who are you going to sue? Anthropic? Good luck. Good luck suing an LLM. Good luck suing OpenAI or Anthropic. Very good luck to you. No. People will continue to use Moody's. They know it's safe. They know it's reliable. If they have a problem, they know they can pinpoint this is your fault. Moody's. So you can sue Moody's. They know it's not the first time it happens. I mean, you stay in your in your comfort zone if you stay with Moody's or S&P Global. This is the first safe argument that we learned a few days ago. The second argument is Moody's says we will be much more efficient because we will integrate AI everywhere. We will integrate AI everywhere. We will hire fewer people, and we will reaccelerate revenue. This is exactly what S&P Global has said. We no longer need the humans because we can automate many things right now. This is the same thing that MSCI is saying publicly for a few quarters now. We need fewer humans and we will reaccelerate because AI is good. Actually, the CEO of MSCI said two things. One, AI is a godsend to us. Two, we want to become a total AI machine. It was a little bit too bullish for the market, in my opinion. I mean, this is quite a shocking use of words. So people maybe did not believe him. But now, S&P Global and Moody's are dancing to the same music. They are saying exactly the same thing. So maybe people will start to believe this narrative that these data providers will integrate AI everywhere and it will work fine. You have the trust, you have a reliable data, but now you are getting more efficient. So they will benefit. Moody's will benefit, S&P Global, FICO, every data provider with their own data, real automation and trust will benefit. And this is why I bought the dip, because people that were selling did not do the analysis. The crash was so fast. People that were selling were people that were panicking, right? In a couple of days, it was done. It was not a long crash to let people understand and do the research. No, it was really fast. It was a flash crash. You had 1 week to think and then you're out. So if you wanted to get out, you got out. Well, I took your shares. I would gladly take your shares, buy your shares. And it seems like the CEO is sharing my opinion. I've never seen the MSCI CEO so bullish. They say they are undervalued and they are doing massive buybacks right now. As you can see from the revenue up and to the right, you can also check the cash flows. And I want to show you the buybacks that the company is doing. Cash flow from operating revenues and buybacks. Yeah, this is this line. If you look at on a quarterly basis, the cash flow from operations, so in blue, and the buybacks in orange, what can you see? You see that the company is not doing buybacks every quarter. For some quarters, they stop completely the buybacks. Look at this, in 2021, they completely stopped. And then in some quarters, when the stock is cheap, they do massive buybacks. In late 2018, massive buybacks. In COVID, during the COVID crash, massive buybacks. In 2022, when the valuation started to drop and people entered the recession, the deceleration, the stock drop, massive buybacks. In 2023, 1 quarter of massive buyback. And what do you have now? Now we have the largest buyback in the history of the company. In Q3, they did $1.2 billion of buybacks. In Q4, $900 million of buybacks. The management is telling the world, we are cheap, we are resilient. The management is telling the world, we are going to become a total AI machine. We are stopping hiring. We are improving the margins. The management is buying their own shares for themselves. You cannot be more bullish. So, what is the price paid now? What is the valuation? Is MSCI really cheap? You can look at the price to free cash flow over time. The business is of quality, right? It's resilient. It's recurring revenue, like 70% of the revenue is recurring. So kind of recession-proof, inflation-proof, asset-based fees. So it deserves a premium, right? It's a premium business after all. With a premium management team, the CEO is still the founder that has been here for more than 30 years now. And you have insider ownership. The CEO owned 3%. So premium quality business, premium quality management team. So you deserve a premium quality valuation, obviously. You will never buy this business at a PE ratio of 8. Impossible. So over the past decade, this is the price to free cash flow. Oscillating between what? 30 at the lowest point, 20. 30, 20. 30. In 2021, people became completely crazy. Price to free cash flow of 60 because of the rise in ESG. I was not buying at this time, by the way. And then the valuation dropped to a more reasonable price to free cash flow of 35, 30, and see what we have right now. The valuation is dropping and dropping and dropping, and I started buying in 2025 at a price to free cash flow of what, 30. I bought the dip. here, 27. I bought the dip here in December, 27. And I bought the dip here at the absolute bottom, at the price to free cash flow of 25. So this is in my sweet spot. This is what I said in the introduction of the video. So what are your assumptions and the intrinsic value of MSCI? Well, if you think that the free cash flow will continue to grow at 12% per year, they deserve a price to free cash flow of 30, dividends will not grow just for the sake of being conservative, and buybacks will be at 2% per year, then the fair value of the business is $730. And if you buy right now, the stock is 34% undervalued. You can estimate to compound your wealth at 17% per year, a CAGR of 17%. I am buying MSCI with these kind of assumptions. The stock rebounded since I bought. So my CAGR is a little bit above 17%, but you get my point. If these are your assumptions, it makes sense to buy MSCI for a premium quality business model. And this is so bullish. The CEO is buying every dip. And we will see. If the stock price drops, I will buy more, I think. If the stock price rebounds from here, I will not buy more. I have enough for my portfolio. It's already my second largest position. If it goes back to 600, so be it. I will enjoy the gains and I will not complain. Now, if the stock drops, I will buy more. I'm telling you, I will buy more to make it another bigger position. And we will see. Imagine if the stock drops to 500 again, or in the 400s. I will buy the dip. And we will see for the fourth time in a row if when I'm buying, the CEO is buying for one of the three reasons I highlighted before. So we will see. But yeah, very bullish to see this. And I'm very happy to see the CEO of MSCI buying the shares at the same time I'm buying the dip. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.